All right, everyone, welcome back to another video here with Invest for Tomorrow. And as we could see here on the screen, we have Palantir's website up. PLTR stock is what we're going to talk about. So stay tuned for all the information. If you learn something new or you find this helpful and informative, all I ask in return is for you to smash that like button and let's get right into it. So the website's here on the screen. I highly recommend checking out the website to understand the company much more than what I'm about to cover. But let's talk about some very interesting stuff. So far in this downward trend, after hitting a high here of $45 back in January, going into almost February, it's hit lows here of $20. If this stock holds itself up above $20, it's definitely showing strength, but anything between $20 to $15 is definitely something to look into, further understand the company, to make a rational decision as an investor. So let's talk about what's attracted me the most to this company. So the first thing is institutional ownership. It's been going up tremendously, and I have BlackRock pulled up. They own already 33 million in total. And then we also have Vanguard, which I like to look at. They're tremendous as well, and they have 20 million in total. Now, as we could see here, since the beginning of March, Vanguard has been loading up to their ETFs and their index funds tremendously, right? Since the beginning of March, and many others. And as we scroll down here, we can see that one of the conservative banks here, JP Morgan and Chase, has almost 20 million shares at 1178. So they've been in this one early. Either they went ahead and added some more on February 19th or a little bit before that they had to file a 13 FA, but still they have a tremendous amount of shares. So let's look at what this stock has going for it. So back on the 8th of February, Palantir soars on artificial intelligence partnership with IBM. So this is a big deal. IBM has been trying to do what PLTR can offer for quite some time. They created this supercomputer, and it's called the IBM Watson. Well, the Watson didn't meet the expectations that IBM wanted it to be, and it's supposedly the supercomputer that was going to be able to offer AI intelligence and cloud services, and that has not failed completely, but not has been what they expected. So we can see here in the whole entire article, just zooming right into what's important, the product is intended to make it easier for businesses to build and deploy AI-infused applications with IBM Watson. So PLTR is going to be able to gain access through IBM's customers, IBM's name, following. PLTR is going to obtain market share there because IBM Watson is literally using PLTR stock's innovation and product to make the IBM Watson be what it is. So it's almost like a phone manufacturer using a specific chip for the processor to that phone. And IBM is the phone and the chip is PLTR to give that processing potential and fuel. So that right there is very, very interesting to me. This is a short clip talking about it when Jim Cramer talked about it, but that right there showed me a lot of potential here because IBM is depending on a smaller company than it to go ahead and provide one of its services. That's going to give PLTR an upper hand. So we also have Cathie Wood, ARKW on the 4th. We can see here PLTR, 2.1 million shares. And now when we go to the most recent, 1 month later, which was this Friday, right, on the 5th, we could see that PLTR, they own now 5.2 million. That's a big jump. You can see it right there, 5.2 million. They jumped big time. That's a 2x jump in their position, 2x jump in the market share value, and PLTR has a lot of potential. Now let's see why I'm talking about if this goes below $20. If it goes below $20, the low end spectrum is saying $15 on the low end of analysis ratings. 4 are saying sell, 1 are saying hold, 2 are saying buy. The high end is 40, midpoint is 25.83, low end is 15. So if this goes between 20 to 15, it's definitely something to watch because institutional investors are completely ignoring what analysis ratings are saying, and they believe that this can actually go on the up end, probably even past $40 for them to be doing such bold millions and millions of share buying at a time. I hope that you guys found this video helpful and informative. share it with your friends and community. And as always, guys, thank you guys so much for watching. Why is the market up, and have we hit the bottom of the crash, quote unquote, or correction here, right? That's the question. So the first thing is stimulus is in the works of being passed. Everyone's excited. That's building that anticipation and excitement moving forward. But also the 10-year treasury has hit a peak here on Friday of 1.57. It had cooled off. It ran up to newer highs on Monday. And now from Monday to today, it's been dropping down and cooling off. And it's been hitting newer lows every single time. This is helping the market tremendously, that the yields are going downwards. At some point, if this was to not go any lower, the market could continue to go upwards, like I've said before, because they will detach from each other. But right now, we've noticed the effects of this going up really fast, bringing down the market, and it going down pretty fast and bringing up the market. So we need to see them both detach at some point, but right now they're correlating pretty well. So one goes down, one goes up. Now, this has also the mix of the anticipation of stimulus. But another thing too, this may have been the bottom for one reason only. The fact that institutional investors and retail investors were loading up the boat. If you saw my previous videos about that article, this was fueled. I mean, that run was so fast that if you're looking at it from the sidelines, you're like, someone knows something, right? So it was in the hopes of stimulus. Stimulus is passed. Then this spikes downwards because of the fact that we hit an all-time high again of 1.6 and some change in the 10-year treasury. And then today we have a run as it's going downwards. And now it's going lower and the market is still going downwards. So that's how we're noticing that there will be a detachment coming soon. But I wouldn't be surprised for this to go lower or hang out sideways and for the S&P 500 index to dip a little bit more in the coming days, because it's just natural. The indicators in my chart are showing that, and all the different indicators that I've looked at, they're showing that there is some room for a potential slight pullback a little further. Even if it spikes up, pull back a little bit further, and then if there's strength in the market, it will spike right back up to newer highs or try to break even. Now, the first thing I'm noticing is the fact that if we stay away from down here, and could we retest that? Possibly, but if we stay away from that down here, this is showing strength in the market overall, and that may have been the bottom. So all these dips were an opportunity, and if we retest this, every dip towards it, and even if we break through it, is an opportunity, because in the midst of this downward trend is the beginning of the next bull run. The only thing I can see pulling down the market in the near future, if the Federal Reserve talks about it next week or next month, whenever they decide to do it, is the year-over-year inflation. And that's going to surprise the market just a bit. Don't be surprised. Be prepared. I always tell you guys, it's not about being a bear. It's about being prepared and aware. As always, guys, if you learned something new, subscribe, share this with your friends and community. Thank you guys so much for watching, and let's make some money.